Hello, and welcome to your weekly US markets review brought to you by SG Futures, coming at you on Sunday, the 21st of February 2021. This week on the E-Mini S&P500, we really saw a whole lot of nothing in what was a relatively shortened week of trade. Coming in on the Monday, we'll mark it out on here, we had a shortened trading hours period during Globex. Then we had 4 days where we retraced back into the previous week's area of balance over here, and we pretty much chopped around inside of it, finding support at the very bottom end of balance. And depending on where you would draw your balance lines from, we could say that the close on Friday was a little bit on the bearish side. But it is worth mentioning this week we had one of our trades that we've been teeing up for quite a while, which was on the long side on a buy on Thursday, where we finally traded down and we had a little kiss of the 38.80 level, which we'd had marked out on here for a number of weeks. So that was one of the really good trades we took this week. Outside of that, it was mostly just scalps in a much shorter time frame. But really what this week has told us is that we've had a rejection of the higher prices up here on Tuesday's candle, and what's also worth noting on Wednesday is that the close closed right on the nose of the top of the balance area, and when we opened the following day we opened way down here. We printed some lows on Thursday and then we closed up in and around near the highs. Friday was a really tough day to trade, and we really didn't put anything on, and to be honest we pretty much walked away from the screens at about 5 o'clock here and just let the rest of the day play out. We closed just below the 3900 level. So we've rejected the higher prices up here after Tuesday's day of trade, and we touched the very bottom of balance on the Thursday. The nuance we take from that is that we've had failure at the lows and again failure at the highs on Friday of the high of the balance area. So 39.25 is becoming a pretty significant level for this market to chew through, and given that it's failed up there and it's closed down here in and around the sort of 38.98 level, that it's not beyond the realms of possibility that we have another test down below here. And if we test 38.80 again, I feel that this time we may actually break through it and tag the 20-day moving average, and then we start to get into the previous levels of balance, which would be these balance candles over here. So that particular area will then become of interest with the low of 38.2350-ish as one that's coming into play. Depending on where the futures open this evening and what the sentiment is like across the European and Asian sessions tomorrow morning, we could see a break above this 39.25 level, and that's something that happens all the time during Globex. It floats off like a balloon to higher prices. This is when we're going to start looking at the balance rules from this particular balance zone. So this balance zone ranges from 38.80 up to 38.25. It's roughly a 45 handle zone, and our rules tell us that when we're in balance and we break out of balance, we double the balance area to the upside, and that should give us an accurate area of where we're likely to tag next. So we would take the 35.25 and it would lead us to a price of about 39.70. Now that is a back of an envelope figure based on what we're just eyeballing off the chart in here. So they're the kind of ideas in our mind as we come into the trade this week. Having a brief look at the weekly profile view on the E-Mini S&P, what we've seen this week, which I'll mark out the week that's been, was just last week. What we have seen is we have overlapping value between the 2 weeks, and value is slightly higher on last week than it was the previous week, but our volume points of control are pretty much exactly the same, in and around the 39.05 to 39.09, depending on how close I zoom in here to be able to see it. One of the bearish signals that we have is that we've closed in the lower half of value, literally right on the nose of the value area low. This is going to be a real wait and see when the regular trading hours open tomorrow, to see A, where the Globex price has taken us, and B, what the sentiment is when we open. If we are opening below this particular weekly value area, we definitely tag some of these single prints in the green box in here, with the potential to fall further down to the sort of 38.22, 38.23 sort of level to the downside. To the upside, we would hope to see a little bit more of a filling out of this particular part of the profile up here, which is relatively thin and would correspond to the highs from the previous week. So we would see anything bullish above the 39.25 level. If we break and hold above there, we're targeting 39.70-ish. However, if we open below 39.25 and we can't seem to chew through it, then we're definitely looking at potentially some lower prices. That's pretty much what the market profile theory teaches us. So if we have a little look at what happened last week on the daily profile, let's jump in here. Now, granted, this was a shortened trading week. One of the areas we said was significant in last week's video was this end period spike down here from Friday's price expiration into the settlement. And it was interesting on Tuesday to see how that actually played out. We opened well above the price expiration, which I said last week was incredibly bullish, and it turns out I was completely wrong. I thought we'd see maybe a tagging of these levels down here and then we'd shoot higher. But what we saw was we've actually built out a really nice B shape in and around the price expiration. So the market has built out value in there and has spent time and transacted contracts in there. So that is a significant area, and the sort of overhang of this particular node in here on the TPO is right on the nose at 39.25, which corresponds to another price expiration high from Wednesday the 10th of February. So these are really significant areas that you'll only ever see in a market profile chart. So we closed literally on the high of Wednesday the 10th on Tuesday the 16th, and the following day we traded lower. We traded sub 3900 and then closed pretty much where we closed the day before. And this was a real head fake in the market, in that when we came in on Thursday, we really felt that this was a rejection of the midpoint or the lows of the balance area previously, and that we may see higher prices. But really, Thursday was a fairly choppy day, and the only trade we got off was the buy at 38.80. What's interesting across these 3 days is that we have on Tuesday, we filled out value in and around the price expiration spike from Friday. But then on Wednesday, we had the value break lower. So value built out to the downside back inside this period of balance over here. The same happened on Thursday, where value actually migrated lower. However, the fairest price to do business with a volume point of control was up here, well above the close and really near the top end of value, which is again a little bit confusing when you think about what this market is trying to do and what it's trying to tell you. On the one hand, we're seeing price kind of sell off and tag some new lows that we haven't seen in a couple of weeks, but then we have it rebounding straight back up and closing in the top half of value with a VPOC near the top end of value too. On Friday, we had value overlapping higher, despite the fact that in M and N period we had a sell-off and we closed below the 3900 level. So this is the kind of fly in the ointment for me, in that we've had a little look above the 39.25 on Friday, and we've closed in and around the lows of Wednesday's trading session. So it's hard to know how we will go about playing this. We can only really see how it opens tomorrow and see if we trade below the 38.80. I think if we test 38.80, I think it's only a matter of time that we break lower and we start to look for levels in around the 38.63, in around the 38.64 mark, all the way down to the 38.22. I think those levels begin to come into play. It is worth noting that there are a couple of other nuances that maybe have us leaning a bit more towards the bull side, which we will get into in a minute or two. So what we're going to do now is jump across into the zoomed in version of the profile from last week. So this is our zoomed in version that I trade off every day, and we can see a little bit more of the nuances that we saw over the course of last week. We mentioned the previous price expiration spike that was pretty relevant. What we can see here is on Tuesday's trade is that we filled out most of that. and we built out value there. And for areas where we didn't build out value, where we weren't more than 5 or 6 TPOs wide, the remainder of the week filled out that particular area, particularly on Friday. That's again an important nuance, that we've built out value there. The nuance that is important here is that we've closed all the way down here. So we can see on the broken out version of the profile in here that it was really mid-morning or early afternoon in the session, and we really came off relatively hard in F and G period. And this is where we started to find more acceptance to the downside. One of the nuances which we really do want to take is that, M and N period at the end of a week can often be a little bit of a head fake, because you've got a whole myriad of things happening in the background, in that you've got weekly options expiring, and you've got people who are in positions who are maybe exiting them, who don't want to be long or short going into the weekend. So it's not giving you a full view of what's happening across the market, and I generally take M and N period, particularly on a Friday, with a grain of salt as to what the actual sentiment really means. So we've closed very much so on the lows. We've closed below the 3900, which, yes, is significant. However, I still think it's absolutely possible that the market overnight rallies higher and then opens over and above this 3925 level, which is in here. One of the nuances that we do want to mention is on Friday we printed a poor high, and that's another reason why we think we may trade above the 39.25 level in a regular trading hour. It will be to clean up and correct this poor high. So really that's that for the week. Just to briefly summarize, what we've seen is a failure of the market to get acceptance above 39.25, and we've now seen a full retracement of the previous balance area that the market was in. It has failed at the lows of the balance area, and again has failed at the highs once again at the 39.25 on Friday, and we've closed down near the lows of the balance area from previous. So really it's how the market reacts to this, and really what the sentiment is and the carryover from the Asian European sessions, that will give us a real idea of where this market is going to go. I feel if we open above 39.25 and we can hold there in A and B period in particular, then we start to target some levels to the upside, which would be the sort of 39, 37.5, right up to cleaning up the top end of Tuesday's profile, which also features a poor high. That's if we open above 39.25. If we were to open below 39.25, maybe in the 39.15, 39.18 sort of level, we'll really want to just see how price action reacts to 39.25 when tested from below. If we open below 3900, then any sort of selling that we see should target 38.80, and I feel if 38.80 is tested again, then I feel that there's a good possibility that we go much lower into the targeting the 38.64, 38.65 sort of level. So that's kind of it from what we think our general plan is coming into the week. I'm going to have a very brief look at the Nasdaq. The Nasdaq, which had a down week in that it's opened at 13,835. It's had a real go off the 20-day moving average. It's actually had a good decent look below by a good 30 handles or so. And on Friday it's closed just above the 20-day moving average. So that'll be really one to keep an eye on as to whether it holds the 20-day moving average. Then the other market that we actively trade is the Russell 2000. What we saw last week was a proper down week on the Russell, and this is often and previously this has been the leader in price action. It's given direction to the other markets. So we saw quite a bearish day on Tuesday. It closed inside the balance area from previous. On Wednesday, it's had a bit of a hammer-shaped candle in here, but the highs are at the lows of the balance area. Interestingly, on Thursday, it had a good look towards the 20-day moving average. It didn't tag it, and then on Friday, we've broken higher, but then closed just below the bottom of the balance area that we'd marked out previously. So really there's a lot to digest in all of this. It feels like overall the 4 major indices in the US are waiting for more information, or perhaps this is a little bit of a consolidation before a general break higher. So that's pretty much all from us at SG Futures this week. Thank you so much for watching. If you want to learn anything about market profile, please visit our website at sgfutures.com/education. Otherwise, have a great week of trading. Take care.